There you go.
Now. So it doesn't see me, it's just a slide.
It's still gonna see you for, in like the background of it, but the main screen is gonna be the share screen.
Got it.
So they will still see you.
Okay.
When they're looking at the. And I'm gonna put in the WhatsApp too. But I'll monitor that, so you don't have to worry about this.
Well, you guys ready to roll up your sleeves and learn about credit repair?
Yes.
Let's do that. Let's make it standing ovation. So there are folks on Zoom too.
There will be. I'm confident. Hopefully. You got consent to it.
Yeah, so thank you, ladies. We're rolling up our sleeves. We're gonna do a little work on credit repair. So credit repair is something that everybody needs to understand, even if they have good credit, so that they know how to maintain it. I just want to tell you, it's not rocket science. It's pretty simple stuff. I'm going to go through several things that you can do, several steps you can take to either fix or maintain your credit. Hey, come on in. Pretty much everything you can do to fix your credit can be learned without the help of a credit repair company. There's a lot of companies out there that are profiting off of the consumer's ignorance or just not being aware that you guys have the ability to help yourselves. The first step in having good credit, maybe it has to face the screen. Switch the slide.
You might have to take the mouse and click it on the PowerPoint again,
Okay.
because I
Yeah.
hit the Zoom controls.
Okay, there.
There you go.
There we go. Excellent. So obviously the first thing you need to do, makes sense, right? Don't pay anything late. But it says 1 month late. So I wanted to talk about that for a second. If your credit card bill is due on the 19th of the month and you pay it on the 20th, is it going to hurt your credit? What do you think?
No.
No. So it has to be a full month late. So on the 18th of the next month, if you paid it, you'll still have no negative impact to your credit score. It has to be 1 calendar month late. So everything needs to be paid no more than 1 month late. All 3 credit bureaus use the same rule. The next thing you need to learn is that paying off collections are medical bills, credit card bills, any payment in installment loans that you have stopped paying long enough so that the creditor decides to write the debt off as a bad debt. Once they may have tried to collect this money from you by calling you, and then they may have threatened to send you to collections or to send you to court for a judgment. But once they've written it off on their books, let's say you have a $3,000 balance with Chase on a credit card. Once Chase gives up trying to collect the money from you, they're going to send it to collections. A collection is a really damaging event to your credit, and you want to make sure that you don't get collections. But if you do, just paying the collection off, right? So now if some debt collector calls you up and he says, hey, you owe Chase $3,000, I will let you off the hook for $1,500. You may be encouraged to pay it to zero and settle it with them, but settling your collections actually hurts your score, and paying it off doesn't remove the issue permanently from your credit report. Once you pay a collection item down to zero, whether you pay it in full or settle it, it still remains on your report for 7 years. So what you'd like to do with a collection is avoid it in the first place or try to undo it. You should work with Heidi and I to work with any debt collector that you owe money to, rather than just try to manage that yourself. There's a lot of complicated nuance to that process, and many times you'll end up doing what you think is going to help your credit and actually hurting it. You want to get rid of the bill because it's been a sour, emotional, negative experience, but then they're offering you to save the money. And it seems like it's a win-win. That's what the debt collector is going to make it feel like. It really does hurt your credit even more. What you probably want to do is go back to the original creditor and start to talk about the circumstances which led this to come to collections. And if it's just a recent thing in the last year or less, you have a good chance, depending on how you approach it, of getting the collector, getting the original creditor to actually allow you to pay them back in full. And then they will write you a letter which says this was paid in full and sent to collections in error. I've had hundreds of instances in my career where I've gotten my clients a letter like that, and I'll help you. I'll give you the script. I'll even send you a copy of the letter that you can provide to them to regurgitate back to you on their letterhead to help you potentially get collections removed. Old collections 3 years ago, they're not going to pay any attention. It's long since under the carpet. And you'll have to deal with the medicine of paying it in full and waiting 7 years. If you just ignore it, because now they've stopped bothering you, right? It's a collection and nobody's calling. So that's easier than last month when they were harassing me to pay the bill that I couldn't pay. But what you want to understand is that that collection will never go away. Your credit score in that regard will never heal until you address it. So try to address your collections. Obviously, you want to correct any errors. So what we do when we meet our clients, we pull their credit, we provide them a copy of the credit report, and we go through it. In the instance where their credits suffered, we go through and we discuss why. We go line by line. We want to make sure that all the information is accurate. So you should always check your credit report to make sure everything is accurate. If you have any questions about what things mean on the credit report, you can always bring those to Heidy or myself, and we're happy to explain. Sometimes look at a credit report. I have one in here we can look at later. Sometimes it looks a little complicated, almost like it's in Greek. Although some of us speak Greek, I think. Everything older than 7 years is supposed to fall off your report. Sometimes it doesn't. So that's another thing you want to check for. You may be surprised to find that your Sears card and your Target card that you haven't used in 10 years are still showing up on the report. You shouldn't see them at all. And these additional creditors, even with zero balance, may or may not impact your score. So it's something you want to work with, something you want to look out for when you're checking through your credit report. Tip number 5, probably the most important one in terms of what I do on a daily basis and helping our clients, what we do, and helping our clients repair their credit. Most cases, we're going to be taking a look at a list of creditors that have a certain amount of money owed and a certain amount of available credit. This says, be hyper aware of your proportion of debt to credit limit ratio. This is your utilization rate. Does anyone have a credit card? What's the credit limit, sir?
Not much.
That's
probably $1,000.
Right, okay. So if you have $1,000 credit limit, what's the most you should spend on that card? Some of you guys may have heard me talk about this already.
300.
Yeah. So 30% is the best. 30% is the ideal or maximum rather proportion of debt to credit limit ratio. When you have a card that has $1,000 limit and you owe $300, yet you need to purchase something and you don't have the cash for it, what do?
Probably max out my credit.
Okay, right, but that will affect your credit score though. But now you know that decision hurts your score.
Yeah.
And it's really at a low number, right? $300 is not a lot of money. So what I do when I'm at the limit, my self-imposed limit of 30%, let's say I have a $10,000 credit limit on my card and I've already spent $3,000. Okay, what I'm going to do is I'm going to call up that credit card company and say, I would like you to increase my credit. Now I'm below 30% if they agree to do it. You should probably put a Google reminder in your calendar to call all your credit card companies once a year and ask them to increase the limit every year. Okay, alternatively, if they won't increase it, or if you still need more money than they've given you, right? So let's say they moved my 10,000 up to 11,000, that only gave me another $300, and I got to buy something that costs $5. Apply for a new card elsewhere. Applying for more cards is not a bad thing. You've heard the phrase building credit. You build credit by having a lot of different credit items paid on time. If you can evidence that you have 10 credit card accounts that are all below 30% and they're always paid on time, you're going to be building credit more rapidly than someone who just has one credit card, right? It's not about just not having negative events. They're building credit, and the more pieces, the more bricks you put in your foundation for your credit profile, the faster you'll be able to fix your credit if anything should go wrong. A lot of the clients that we'll talk about, Heidi and I work with, when we look at their credit, they may have a 550 score and we can't give them a mortgage. But if we look at some of their bills, we can structure a plan that can get them in 30 days up to a lendable credit score. Or if they just have an average credit score, we can get them to an excellent credit score in the same amount of time. Having more cards, like I said, doesn't hurt as long as the proportion of debt to credit limits is low. So rather than have one card at $1,500, you want to have 5 cards at $300 with $1,000 limit. That doesn't seem right, and it seems inconvenient, but it's the best thing for your credit profile. Tip number 6, time helps. The older a late payment is, the less it hurts your score. The more you distance yourself from negative events, it makes sense, the less impact they're going to have. Collections are tough because collections really hurt your score when they come on, and paying them off to 0 doesn't really fix it. It just starts the time clock of 7 years till it deletes, but from your report entirely, but or disappears. But you should know that 5 years later, and 6 years later, and 6.5 years later, the impact of that collection will be diminishing. It won't remove itself, but it'll just get less and less. Time helps. All things considered equal, your credit scores will actually go up over time. Okay, because you're getting away from these negative events. Tip number 7. Adding a new account and keeping a low balance can help you build your score. You don't want to assume that this will always work. You should check with Heidi and me. We have software that we can run, and we can speculate or hypothesize. What if we did that? Would that help our score? If I open a new account with a major bank, not just a local furniture shop that has a finance company behind them, but a major bank, okay, we can take a look at what will happen to your credit score 1, 3, 6, 9, 12 months into the future. And in many cases, if you don't have as big of a profile as you might need, it'll help you to build that credit. Sometimes it wants you to open a new account and not even put a balance on, right? Anyway, I hope that makes sense. Any questions so far?
And even with opening new accounts, sometimes, like when your credit score is low and you have trouble getting a credit card, there is some of the larger banks that will give you a secure credit card. So if you have $1,000, right, you can go to the bank, and I know they'll give you a credit card for $1,000. They keep the money for 12 months. So as long you guys still gotta pay it. So because we had a customer who followed that, however, because they had used $1,000, they have to pay.
Yeah, it's been the first time.
It defeats the whole purpose. So they hold the money, you gotta pay it every month. After 12 months, they give you your money back, and they actually usually always increase your spending limit. So that's, if you're having trouble doing the secure credit cards, you just gotta find out which banks do it. And you can talk to Mike and I, we can tell you which banks are doing secure credit cards.
Yeah, that's a great point. So one other thing that people may not know is that you shouldn't close old accounts. You shouldn't close accounts that you no longer use. Closing them can actually hurt your credit scores. What you should do rather, you may have an account that you just want to distance yourself from. Maybe it was an account you shared with an ex-boyfriend or a fiance or something, or maybe it was an account that you had trouble paying and you had these horrible experiences with their customer service people and you just want to get rid of it from your life. But that's not the best thing for you. What you should do instead is cut the card in half, throw half of it away today and put the other half in the shredder next week. Right? Don't throw it all in the trash can all by itself. People are combing through garbage cans all the time. I hope that makes sense, but that's really all I have. There's other stuff we can get into detail. I have a whole bunch of supporting slides to hopefully answer some questions if you have about how we go about doing the credit repair with some specific examples. But really, I want to say that you can ignore everything else. What you've learned in here really is enough for you to build and maintain excellent credit. There's not a lot more to it. There's a lot of people out there that are going to try to create fear in you or create uncertainty. And the reason they're doing that is so that you'll buy their credit protection software or their credit repair products. You don't need to pay for this information. As I said in the beginning, it's not rocket science. Yes, it's hard when you lose your job or get hit by a bus to pay your bills, and you have instances where in your life where things are going to happen to your credit. But now you've got the tools to get yourself out of that hole if you're in it. And we do that for all your clients. If their score is not above 740, we're going to offer credit repair. 740 is like the highest tier to get the lowest interest rate on your mortgage. So anyone below 740, I explain this process to them. I explain, here's what steps we can take to fix your credit between now and closing. If you take advice from those other companies, they may or may not be acting in your own best interest, right? They may be doing whatever it takes to get their commission. Do you understand how the collections work? If you owe me $3,000 and I give up collecting it, I'm going to sell it to Heidi's debt collection company, but I'm going to sell it to her for $400. I take the $400. I write off the $3,000 loss at tax time, and I made a $400 profit from my new revenue stream, my collections retrieval. Now Heidi's company bought $3,000 worth of debt for $400. If they can get you to pay them $450, they made $50. So when they call you up and say, we'll sell it for $1,500, understand that it's a very different thing than you might imagine as a consumer. You might think you're talking to the person that you owe $3,000 to. You don't know that anymore, and unless you go right away back to the original creditor and start to fix that problem, all you're dealing with is a ruthless debt collector who will say or do anything to get any amount of money. That person, they call that person on the phone, they just want a commission. They're going to get 20% of that $1,500 if you agree to settle. And as they do that, they destroy your credit even more. So, don't pay for credit rebuilding services. Don't waste money by paying for something you can do on your own. A little research and focus, and you'll be armed with all the tools you need to repair your own credit. In fact, you're already 95% of the way there. Just reach out to Heidy or me to begin discussing the steps you need to take to qualify for a mortgage to get you into the house you've been dreaming of. And what if you've already found the house, but you've got weak or average credit? You might qualify for the home now, but at a higher interest rate. You've got a decision to make. Are you going to wait to fix your credit? As your credit goes up, you might be able to get a lower interest rate. But what if interest rates are rising faster than your credit is healing? So you've got a tough spot now with interest rates rising. I would suggest that if you can afford to get into a home now, and that's what you need Heidy and myself for, is to pre-approve you and your buyers. If you can buy the house now, we've determined you can afford it now. Yes, it may be at a higher payment than you'd like. It may be a smaller house or less house than you would have liked. But if you can get into a house now, it may be to your best interest, because you're going to start building equity, not only by making the mortgage payment, but also by the appreciation of the asset. You're also going to fix your credit, because the fastest way to build credit is to pay a mortgage on time. So maybe what you're talking about is hoping rates don't go up, get into a house as quickly as possible, and then refinance it. You'll be one of the few people out there that would be interested in a refinance, because if we're going to give you 6% now because your credit is weak, but you could still get 5% 2 years from now once you've paid that mortgage on time. That would help you save more money at that point. So having bad credit is not a reason not to buy a home, right? If you do qualify, you should probably be shopping for a home right now, given what we see in the market. I hope that kind of ties it all together. You can always refinance later, but there is no assurance that rates will not go up more.
Right.
Anybody have any questions about credit repair in general, or what specifically we do with folks?
So if you don't use a credit card, your best advice would be just to go to even for small purchases.
Yes, you really should. You should always use your cards and pay them in full monthly. That's what I try to do, right? I use the card as a convenience. My wife and I have one credit card, and we pretty much use it for everything. I mean, besides, there's points, you can get points for travel and things like that. I really haven't mastered that myself, but a lot of people, I hear about some good rewards they get from using their cards that have points. So you put every bill you have on the card, and then you pay it off every month in full. But definitely keeping it below 30% all the while. It doesn't mean that you go up to 70% and pay it down below 30% at the end of the month. It means you stay below 30% all the time. Good question.
When you pull your credit score, the utilization, is that across all of your credit, or is it each individual?
It's a great question. The algorithm is not public, it's not known. But what I see is that they do two variables. One is each of the individual accounts is measured, and also your overall is measured. And each of them has their own weighting. There's so many different FICO scoring models. That's something I didn't mention. When you guys look at your FICO score on your phone, you're not looking at the same score that we end up seeing. This particular customer, not sure if you can see that. Oh. Is it getting bigger? No. This particular customer. This particular customer has a 690, 680, and 683 score. When they look at their cell phone, it's not going to have those numbers in almost all likelihood.
Yeah.
There are different algorithms used for consumer credit. There's different algorithms used in the mortgage industry. You can think about it. If you were an auto lender and you're an auto finance company, when you're weighing whether Maura or Heidi or I is going to be a better risk for you. You look at our credit profile. If we paid our car loans on time every month for the last 10 years, even if we paid our mortgage late, you might be liking us better than someone else who paid their mortgage on time religiously but paid their car loans late. So there's different factors. I think it's FICO 8 that they use now. So you can Google that and it'll give you as much information as is available on the algorithm. It's a good question. I could very quickly go through and show you. Say you have a 683 credit score. We use the middle one, right? We go to online, and let's say we want to speculate about improving the Experian FICO score. And we know they have quite a few credit card bills because we pulled their credit already. We discussed it with them. We just don't know, what the best solution is. They've got $50,000 in credit card bills, and obviously they don't have $50,000. Otherwise, they already would have bought the house and paid all the bills. So they have something less. Well, if we throw $5,000 at the problem and we run this credit repair software, it's going to tell us how high we can get their score within that constraint. And we run the software and it comes up with solutions. For example, here's one for Gerald. Gerald has a 94% chance of in 1 month getting his score above 580. He obviously needs it because 580 is the lowest score that we can lend on. So right now, Gerald is unlendable, but if he spends $10,957 on a variety of credit card bills in the specific manner outlined by the report, his score will be 580 in 1 month and he'll be lendable. And he was happy to hear that because he called me and he says, I know you can't help me. And I said, well, yeah, we can help you. You just got to wait 1 month and you got to have $11,000 and he does that. So hopefully next month, Gerald will get a mortgage. Here's another client. We took a look at all their items on their credit report and we found a way to take their score from 690 to 745. I believe that was immediate. Again, these aren't guaranteed results because a lot of times if there's 20 moving parts in the credit report, they may focus on the 5 or 6 we asked them to, but 1 or 2 other changes might occur and they might set them back a little bit. So you got to be very careful about what you do. We work together step by step, hand in hand. I have a little bit more, but it's just a lot of detail. I'd rather just answer any questions you guys might have, if you have any. Otherwise, we can wrap it up.
So I do have a second card which you don't use. Should I use it anyway?
Credit card? Yeah, I think that if it were me, I would use it. I would not close it because that could hurt me. And maybe I would decide to use it for just gas or just groceries and gas. And then use the first card for everything else. I don't know, when you go around, you always have both with you? Yeah, so it's not an inconvenience. For me, I don't have a wallet, so I don't want to have 2 cards. I just want to have the one. That's it. So yeah, I guess I would keep it open and I would decide on what I was going to use it. Is there some type of expense, some category that I could keep it clean in my mind and just do that? That's what I would do. Good question. All right. Well, thanks everyone for all your time. Hope this was helpful.
Was the recording?
I think it's recording. Yeah, that's it was recorded, but I can go back over the slides and it takes 5 minutes. Is that right?